At TLC Profits, we believe that tax lien certificates provide the largest returns with the most amount of security compared to any other investments in the United States today. Other investments offer safety, but the returns are laughable. Then you have stocks or other investments that could produce large returns, but come with high risk. For this video, we will compare tax lien certificates versus stocks, bonds, money market accounts, and savings accounts. For this example, we will use $1,000 as our investment capital, and we will compound the investment over 25 years. Stocks have historically provided a rate of return around 10% over the long term. Over the short term, stocks can be highly volatile. According to CNN.com, in 2009, stocks overall lost a whopping 37%. So why is the market so erratic? Because life in general is unpredictable. A war here, a hurricane there. These things occur without much warning, having effects on the economy that no one can anticipate. When you buy a bond, you are loaning money to a corporation or government agency, like the Treasury Department, and the borrower agrees to pay it back at a fixed rate of interest over a fixed period of time. The longer the term, the higher the interest rate you will most likely receive. Historically, over the long term, bonds have returned an average of around 5%. Conventional wisdom says that the U.S. government is unlikely to ever default on its bonds. However, never say never. While bonds won't give you the same returns as stocks, they also won't give you the thrashing stocks can do if the economy falters. Savings accounts pay a very small interest rate, but your money is liquid and in general very safe. Money market accounts are a financial account that pays interest based on current interest rates in the money markets. They usually require a higher minimum balance to earn interest and avoid monthly fees. Tax lien certificates pay an interest rate between 8 and 36% interest mandated by law and is protected by the underlying real estate. This means that if the homeowner fails to pay the back taxes owed plus the interest owed during the redemption, you can take ownership of the property debt-free. If this happens, there is a fortune to be made on your investment. Nothing can affect your interest rate you are earning. Not the stock market, the economy, wars, natural disasters, nothing. Here are some current rates for bonds. The best rate you can currently get, according to Bloomberg.com, is 3.39%. The best current rate I could find for a money market account or savings account was 1.01% at Bankrate.com. The best current rate I could find for a one-year CD was 1.1% at Bankrate.com. This tax lien was won by the investor, and the interest rate he was granted was 18%. Let's look at a comparison between stocks, bonds, savings, money market accounts, and a tax lien certificate investment of $1,000 in Florida at 18% compounded over 25 years, and look at the difference of how much your money would grow to. If you took $1,000 and kept investing it into a money market or savings account for 25 years at 1.1%, your money would grow to $1,314.56. Now, if you took that same investment and kept investing it into a treasury bond at 5%, your money would grow to $3,386.35. In the stock market, at 10%, your money would grow to $10,834.71. Getting better. But that same $1,000, if you took it and kept investing it into tax liens in Florida at 18%, your money would grow to $62,668.63. That means the next best investment would be worth $50,000 less than taking that same money and investing it into tax lien certificates. And you do not have to worry about the stock market crashing. Let's do the same terms, but change the amount invested to $10,000. For stocks, if you took that investment and kept investing it into the stock market for 25 years, your money would grow to $108,347.06. If you made the same investment into tax lien certificates in Florida at 18%, your money would grow to $626,686.27. That is a difference of $518,339.21. And that is without taking into account if you actually obtained a valuable property debt-free and sold it for an even larger return than 18%. That is why we believe tax lien certificates are by far the safest and most lucrative investment in the United States today. In your next training video, we will cover the difference between tax liens and tax deeds, and which we recommend to beginning investors. If you want to learn even more about earning high interest rates, we encourage you to sign up for our free online training webinar, so you can get started making big money with tax lien certificates. So if you're ready to take the next step with us, and you're ready to start safely making big money with tax lien certificates, then join us for this highly informative online class by signing up below.